Exchange-traded funds, or ETFs, are the fastest-growing investment category around. There's more than 1,800 of them now in the world, and more than 120 in Canada. Today we have Heather Pelant, the Managing Director of BlackRock, which is a unit of iShares Canada, or the other way around. Welcome.
Welcome. Thank you.
Now, the first two times we've had you on this, Heather, you were with Barclays, owned iShares since in December. BlackRock came along. Does that make any difference to unit holders?
You know, what's interesting is we were always part of a publicly traded company, so the level of transparency required by being part of a publicly traded company hasn't changed. What's new now as being part of the BlackRock group of families is we just have this enormous amount of global competence and asset management that now we can bring to bear for Canada. So that's the nuance that's changed since we became part of the BlackRock family.
And Barclays has still a
Correct. Yeah, they still maintain a large shareholder, a large position within BlackRock. So we still have access to a lot of the same, group that we had before.
Now, the other thing about ETFs, so they're becoming so specialized, there's a lot of them, and they tend to be, I mean, you just announced some emerging markets one, which we're going to talk about.
Okay.
But first of all, I just want to get this whole idea of, like, have we gone too far? Too many specialized ETFs and slicing and dicing?
Yeah. Well, what's interesting about ETFs is that virtually every investor in the world can use them. And I'm talking big pension plan, insurance companies, asset managers, individual investors, advisors, mutual fund managers. So I think that we're still on the cusp of saying that there's a lot of choice that each of these constituent audiences is looking for. I think for individuals, there's plenty out there to choose from, and there's some really high caliber options. It's just a matter now of making sure that you know which one you're looking for.
So, for example, you've just announced some Latin American ETFs, emerging markets. Maybe you want to give us a highlight, because you already had the broad-based one.
We did, and what we heard very loud and clear from clients was that, yes, I absolutely want broad-based exposure, which, the XEM provided. The iShares MSCI Emerging Market Index gave broad exposure, but when the Goldman Sachs study came out in the 1980s, it really started to form a foundation of belief that there is an emergent need to have good caliber options in constructing an emerging markets portfolio. So what we did is we just recently launched Latin America, China, India, and Brazil. To really good effect, right out of the gate, all of those funds have attracted a lot of attention as people are saying, I think I could anchor my portfolio and maybe tilt it a little bit to China and India. If I believe, and the perception is that higher rates of growth are available in some of these developing markets. So to me, the caliber of options now is rewarding for Canadians.
The Latin America fund is two-thirds in Brazil, if I recall.
It is two-thirds in Brazil, reflecting of the market capitalization of that part of the world, absolutely.
So you could end up with Brazil via your broad one, Brazil via your Latin fund, and even more Brazil with the Brazil fund.
And that's where ETFs, the transparent nature of them means you should look inside the holdings. Make sure that the kind of exposure you're looking for is best represented by that portfolio, which you can see every single day. So to me, that's one of the benefits, is making sure that you don't have that overlap in your portfolio. Now,
unlike some of your rivals, they sort of did similar set of announcements with ADRs based on American depository receipts in the States. You choose to invest directly in the securities.
We do. We think that we feel very strongly that particularly with developing markets, being local matters. For example, when you look at a market like the India market, there's a dozen of Indian companies that have an ADR option. So that means if you're investing in India and you're only going with ADRs, you're going to be missing large swatches of the population, or large swatches of the market. Reliance Industry, the largest company in India, doesn't have an ADR. So if you think about it, it'd be like coming to Canada saying, I want to buy Canada, but I don't want Potash Rim or RBC. So that's the analogy that I think best suits. So people are getting a lot more knowledge about what does it mean to go, and I think being local really matters.
Now, last question. In one case, you had to go to Mauritius. Like, it seems kind of really complicated when you get outside of the ADR world.
It's true, particularly in India. In order to invest in local Indian securities, you have to set up a tax entity in Mauritius. So again, it's one of those little quirks that we all have to, work around as we start to invest in newer markets around the globe. And I think that's where the competence that we bring in, that global ability to do that, really does start to matter.
Okay, well, next time we're going to have a new recruit, Oliver McMahon, also of iShares BlackRock, and he's going to tell us about the mechanics of having exchange-traded funds traded in Toronto versus in the USA. And thank you very much, Heather Pelant.
Thank you.